South African banks continue to make progress in expanding on the continent. ABSA recently announced it was to buy the African operations of parent company Barclays and retain the brand in the new Barclays Africa Group. Standard Bank has decided it'll be focusing on its growth plans by concentrating on Africa. And here to describe what he sees in those two banks is hedge fund manager Rowan Phillips from Nitrogen Fund Managers. Rowan, before Warren and I get you into the banks, nitrogen, and I saw on your website you actually talk about nitrogen as a gas, which we remember from our matric chemistry and physics. But there's a reason why you've called your fund nitrogen. What is it?
Yes, so the whole idea behind nitrogen is nitrogen number 7 in the atomic table. It's an inert gas, which means even though sometimes associated with lots of reactions, actually does not react with other elements. So it describes a hedge fund very well in that a hedge fund shouldn't be reactive to market movements. So that's the whole idea and the ethos of the nitrogen fund, that we are an absolute return fund and can make money in all market conditions.
So it's a good reminder of what your philosophy has to be.
Absolutely, yes, and it's good because it does remind us of exactly that.
Ryan, you just mentioned off air you've been to New York recently and you spoke to a few brokers there. Before we started talking about the banks in Africa, I wanted to just ask you, what was that perception around Africa from investors sitting in New York and the United States?
Yeah, so I think, and we're hearing it more and more, Africa is becoming a theme and an investment theme, and it's clearly people are recognizing it as a very large market. It's got a market, and I was reading today, of 850 million consumers, and these are consumers that are obviously climbing up the ladder or the scale, so to speak, and you're seeing a lot of potential growth. And I think given the low prevailing growth rates in the developed economies, and I think also importantly, the prospects for low growth for some time to come in those economies, that people are having to look elsewhere for growth, and Africa is clearly one of the last frontiers. But coupled with that is you're actually seeing real traction of growth.
Is there knowledge? And it wasn't long ago I read about one of the big investment firms in America had an investment map of the world. There was no African continent.
Right.
Didn't even put it on the map.
Yeah, so it's still actually quite a difficult place to access investment. And I think that's where you're seeing South Africa as an exciting investment destination and opportunity again, is that there is this opportunity, but how do we access it? And more risk-averse investors or looking for more institutional type investment are still coming to South Africa, the likes of Shoprite, and more recently with this announcement by ABSA acquiring Barclays Africa operations.
So what about those banks?
Yeah, so I think again there were lots of stats today in terms of the number of banked in Africa, and I think about 24% of the adult population have a bank account. 3% have a loan or something like that. So if you look at it from that perspective, there's massive growth opportunity. This is in a fairly simple type of product or service that most people in a normal economy would have and use. So it's not something new or exciting. That it's normal banking that you need to sell to the population, and as they become more economically active and more middle class, so they're going to access financial services. And so the demand is there and it's growing, and we've got very large and sophisticated banks that are used to working, I guess, in to some extent a developing market, developing environment, that are very well placed to service those consumers, but they also already have a presence, as Standard Bank has a significant presence.
Just to talk about and to, I guess, be a little bit of a devil's advocate here, Rowan, is that, many analysts I spoke to that focus on the continent, say
right.
Doing business in South Africa and doing business in the rest of the continent is like chalk and cheese. In fact, there's no crossover. With ABSA, they've now pushed the Barclays Group operations under ABSA,
right, yes.
And ABSA have a fairly limited experience in operating on the continent. So do you think that's been the right thing structurally to do from that point of view, placing that under the care of ABSA at this point?
Yeah, look, obviously they will get access to all the embedded expertise in Barclays Africa. So Barclays Africa, that operation's been running for some time, and they've got a lot of skilled managers running those businesses. I think as South Africans, we have something of a frontier mentality. There has been quite a lot of success. So I think the South African makeup, South African managers have the ability and the skill to work and operate in Africa.
Isn't there a big opportunity here as well? I mean, our banks are regarded as world-class, genuinely world-class, top 2 or 3 in the world. They also have been very innovative with the gadgets and the electronics and the apps and the phones and all that, more than most first world countries. Now, there's a whole lot of African countries that aren't going to go through all the old technology.
Absolutely.
They're going to go straight mainline to the new technology, and our guys are ready for that.
That's right. So they call it leapfrogging, where you hop over the previous technology. So I think there will be a focus on mobile banking. You've seen some of the mobile banking solutions being very successful in Tanzania and East Africa, and it superseded other banking types of services. So I think banks will have to look at it innovatively and leverage technology to increase use of financial services.
That's, I guess, the opportunity. In terms of the numbers, Rowan, I think the purchase price for the Barclays Africa Group was 18 billion.
That's correct, yeah.
What's it going to do in terms of the mix between profits for the ABSA Group between South Africa and the rest of the continent?
Yeah, so it's a much bigger part of the business. So it works out to about the ABSA share price has moved up significantly since the announcement. So it's around, I think, 15% now. It was slightly higher in terms of the valuation. I think there was a slightly higher valuation put on the African business, but it moves it from negligible to, I think, close to 20%. It might be a bit less than that.
Okay.
But, sort of perspective in 3 years around 20%. And so where Standard Bank used to be the largest player in terms of African operations, which make up currently around 10% of their operations.
Right.
So ABSA is so if you looking at the banks and opportunities and seeing it as a major opportunity, and you've seen the market react strongly to the news, is that now this is a good way through sort of what looks to be a reasonable price South African bank to get significant African exposure. And that's really been exciting.
And First Rand, there was an announcement the other day about them going into Nigeria.
Yes.
But now let's go back to nitrogen, and you don't react to markets. We in a sense have been talking to recent activities, but you're immune to that. So now how do you think about these banks in Africa?
Yeah, so a theme, and it's been growing in our fund in terms of investment opportunities, has been this African growth story, and it's from 2 perspectives. It's a real fundamental story. I think, Warren, your point that it's difficult to operate in Africa is a good one, and that means it will take time, basically. It's difficult to start up operations and significant logistics difficulties, etc. But that's not to say the opportunity is not there. So that's the one aspect. But the other aspect are investors see it as an opportunity, and so are placing a premium on those shares through which they can access that opportunity. You're looking at the valuation of Shoprite, it's substantial. And that is the premium for the African growth story. So we're saying, where may this premium also be placed on other stocks? We've spoken previously on the show about Nampak, which we bought earlier this year, and there you saw real operating performance coming out of their African operations. They've invested significantly in countries like Angola, which is one of the fastest growing economies in the world. And so you're seeing the real performance plus the growth opportunity. Basically, you're seeing improved stock prices. So we like Standard Bank for that very reason. ABSA now, for that reason. There's some smaller stocks in other areas, the likes of BCX. It's a big South African technology player, but has more recently been active and acquired a business that is active in the continent. And is seeing, so again, you saw in their results good numbers from the African operations with good growth potential.
But Rowan, you also all of these companies, you mentioned Nampak, and there's a campaign on at the moment from the packaging industry. You need packaging. Of course, long distances in Africa, packaging becomes very important. But you wanted to ask about the long and the short of it, the long and the short purchases.
Yeah, so obviously one of the key features of a hedge fund is that you can short stocks, either using derivatives or the underlying physical. And you run a portfolio within your portfolio that takes advantage of relative value trades.
Yes.
If you could just explain that for our viewers, and then just give us an example of some of the companies you've been doing that with.
Yes, so basically in terms of how you make the fund inert, like nitrogen, so that it doesn't react to market movements is you have to hedge. And if you long a stock like a Nampak or an ABSA, we need to hedge out the market exposure that we get from that stock, typically with a similar type stock. So in the case of ABSA, you may hedge it out with some of the other banks. You say ABSA is undervalued. There's a big potential here with this Barclays transaction. We like it, but we just want to get the ABSA Africa story and hedge out the market banking exposure. And we may short out there a portfolio of banks. So we may do, and there we'd say, okay, we like ABSA, but we want to hedge it. What is the most expensive bank, or has the bank relative to its prospects, I think importantly, and use that to hedge out the ABSA market exposure. And in that way, just get what you would call the alpha out of the position. The pure movement from ABSA.
Okay, so it takes out the market risk, and you just get value created by a difference, a widening of the gap, so to speak.
100%.
You mentioned off air you're doing that with some of the discretionary retailers. Is that right?
Yes. So I saw you speaking a little bit earlier about the retail figures, and they came out this morning, and I guess they were disappointing. Growth of 1%. On last year, but when you started to unpack the numbers a little bit, there was some inflation in the numbers. So these sort of the nominal numbers were reasonably good actually. The real numbers weren't that great. But the issue is you're seeing inflation come through in food, and so actually a bigger share of the consumer's purse is going into food. And that means there's less available for the other parts of retail, the more discretionary purchases, which is your durables and your semi-durables, the likes of furniture and clothing. And today, for example, once the numbers came out, and I think the market started to absorb it, you saw a movement, a relative movement between the consumer staples, the likes of ShopRite, and that one in particular did very well today. Right. And then the likes of Mr. Price come down significantly. So I think the market's starting to see food inflation is actually good for food retailers, but they're negative for more discretionary retailers. So we're looking at and seeing it as an opportunity to say, and they have been very high in any event, the discretionary retailers, and are really factoring in, I think, expectations of growth which are unlikely to materialize. So there's an opportunity to profit there by selling the stock, shorting the stock, and then buying it at a low price later. But then we would go long something that we like, and the other consumer stocks that haven't gone up as much aren't as highly valued, and make value on the relative values there.
Interesting. It does sound at times like backing two horses, and if you don't get the calculation right, you don't make anything.
No, well, it magnifies both the gains and the losses, absolutely.